am Lami Shindy Sarana.
GFB Galeon. I'm Christopher Cruz. I'm Carlo Iconeras, and we will discuss the additional funds needed.
And projected financial statement of Brain Company.
AFN stands for Additional Funds Needed. It is a concept used most commonly in business looking to expand operation and influence. Since a business that seeks to increase its sales level will require more assets to meet the goal, some provision must be made to accommodate the change in assets. To phrase it another way, the business must have some plan to actually finance the new assets that will be needed to increase sales.
AFN is a way of calculating how much new funding will be required so that the firm can realistically look at whether or not they will be able to generate the additional funding and therefore be able to achieve the higher sales level. Determining the amount of external funding needed is a key part of calculating AFN. This can be determined by mathematical formulas which use inputs that can be found in a company's financial statement. The simplified formula is AFN equals projected increase in assets minus spontaneous increase in liabilities minus any increase in retained earnings.
Projected financial statements are also called pro forma financial statements. The term pro forma simply means as a matter of form. In the business world, pro forma or projected financial statements are typically used to focus on certain figures, such as sales or profit. Projected financial statements are most effectively used to examine the effects of a particular decisions. For example, if you are considering adding a new product line, you will use pro forma financial statements to see how the addition would impact your business overall.
And now, we will discuss and show you the additional fund needed and projected financial statement of Brain Company. Current Brain Company income statement for the year ended December 31, 2022. Sales is 8,500,000. Cost of sales is 5,100,000. Gross profit 3,400,000. Operating expense is 2,500,000. Income before taxes is 900,000. Income tax is 270,000 and the net income is 630,000.
For the statement of financial position as of December 31, 2022. Current asset is 5,100,000. Non-current asset is 4,500,000. Total asset 9,600,000. Current liabilities is 2,125,000. Non-current asset liabilities 2,875,000. Ordinary shares 3,600,000. Retained earnings 1 million. Add additional funds needed. Total liabilities and shareholders' equity is 9,600,000. And for the additional information, number 1 is dividends paid out of 630,000 pesos in 2022 amount to 378,000 pesos. The second one is only current asset and current liabilities are directly related to sales. The third one is the business expect 15% increase in sales next year. And for the last one, the business is expected to retain 40% of the earnings next year.
Now, let's proceed and answer the given questions. 1. What is the expected increase in sales? We will multiply the sales 8,500,000 to the expected increase in the sales next year, which is 15%, and we will get 1,225,000. 2. What is the rate spontaneous asset to sales? First, divide the cost of sales 5,100,000 in sales which is 8,500,000 and we will get 0.6. Then, multiply it to 100 and we will have 60%.
What is the expected increase in current assets? The additional information indicates that there is a 15% increase in sales next year. We need to multiply the percentage by the current assets, which is 5,100,000, to get the answer 765,000. What is the rate of spontaneous liabilities to sales? We need to divide the current liabilities, which is 2,125,000, to get the rate of spontaneous liabilities to sales, which is 25%. What is spontaneous increase in liabilities? It is simple to get the answer in the question. Just multiply the current liabilities 2,125,000 to the expected increase in sales next year, which is 15%. So the answer will be 318,750.
6. The projected sales. To compute projected sales, we need to add 100% to the 15% expected increase in sales next year. Then current asset, which is 5,100,000, multiplied by 1.15 and we will get the answer 5,865,000. 7. The projected cost of sales. Same process as number 6. We multiply the cost of sales, which is 5,100,000, to 1.75 and we will get 5,865,000.
8. The projected gross profit. We multiply the gross profit 3,400,000 to 1.15 and we will get the answer 3,910,000. 9. The projected operating expense. We need to multiply the operating expense, which is 2,500,000, to 1.5 and we will have 2,875,000. 10. The projected net income after tax. To get the projected net income after tax, we need to multiply the current net income 630,000 to 1.5 and we will have the answer 724,500. 11. The increase in retained earnings.
Multiply the projected net income to 40%.
12. The additional fund needed. Current assets 765,000 minus the spontaneous current in liabilities 318,750 minus the increase in retained earning 289,800 and we have 156,450.
Total current asset in the projected financial statement. We just need to multiply the current asset 5,100,000 to 1.15 and the answer is 5,865,000. Current liabilities in projected financial statement. Multiply the current liabilities 200,125,000 to 1.15 and we have the answer 2,443,750. Retained earnings in the projected financial statement. Just add the retained earnings 1 million to the increase in retained earnings 289,800 and the answer is 1,289,800. The total asset in the projected financial statement. We just also add the current asset in the projected financial statement, which is 5,865,000, to the non-current asset, 4,500,000, And we have the answer of 10,365,000.